Gold bugs are among the most annoying demographic within the investment universe, right before silver bugs, palladium bugs, and platinum bugs, especially the ones who insist on taking physical delivery. Go back to eating your canned potatoes, chumps. Hi there, everybody. I'm Ron DeLegge. Welcome to ETF Battles, where it's okay to talk smack so long as you can defend yourself. Today's ETF battle is smack dab centered in the middle of the gold market. We've got the Spider Gold Shares, ticker symbol GLD, versus the Market Vectors Gold Miners ETF, ticker symbol GDX. Both ETFs are among the most popular gold-related ETFs by assets and trading volume. By the way, I'm 96% confident that cryptocurrency enthusiasts are going to hate today's matchup, which makes it all the more fun. Helping us to judge this matchup is Dave Krensis with ETF Portfolio Management and Mike Akins with ETF Action. Judges, welcome to the program. Great to have you with us.
Thanks for having me.
So the four battle categories are going to be cost, yield, performance, and get this, a mystery category. Agatha Christie in the house. So I've got my ETF battle scorecard. It's right here. And as you can see, it's blank. We're going to fill it out. And we're going to go through these four battle categories one at a time. Each of you are going to pick GLD or GDX as the winner in each respective battle category. You've got 30 seconds to do that. Let's begin with the first battle category, cost. Dave, you got 30 seconds. Go.
So on cost, neither of these gold ETFs are that expensive. 40 basis points for the gold metal GLD or 53 bips for the miners index. So at that nominal 13 basis point difference, it's really a factor of which you'd rather own. It's rather nominal given the difference in what you're buying. So on cost, it's somewhat irrelevant, but technically the GLD is a little cheaper.
Let's move on to Mike. What's your take?
GLD all the way. Anybody that's ever tried to buy gold and store it knows how expensive it is to get it delivered and pay for it. GLD is the physical gold. It's just held in the vault for you. So GLD, it's a way to own the metal, is by far cheaper.
Excellent analysis. Well done. Let's move on to the next battle category, which is yield. Let's go with Mike.
Yeah, I'm not sure what that means, Ron. Gold doesn't yield unless you're talking about like how much yield it takes to lift it or something. And gold miners pay very little dividends, so I pass.
So split decision.
Split decision.
Okay. Dave, what's your take on this battle category of yield?
I agree. In this battle, it's really about performance. Yield and cost are somewhat irrelevant for both of these ETFs.
All right. Well, then let's go to the next battle category, which is performance. Dave, what's your take on this one?
You know, over the past 5 years, the miners GDX has performed much better than the metal GLD, but the reverse is true over the trailing 10-year period, which basically leaves you a little bit frustrated with both of these ETFs. They've got very subpar, low single-digit returns or negative returns. So at the end of the day, neither of them have performed very well. And for protection, investors have done much better in the long-term treasury bond ETF, TLT. So neither of these ETFs are very attractive for performance. So I would pass on both of them, frankly.
So split decision in terms of performance?
Sure.
Okay.
Even though they're both positive this year, they're both train wrecks over the past decade, and long-term treasuries were much better protection. So until long-term treasuries stop providing better protection, both of these trends are unattractive.
Okay. Performance, who wins the battle here, Mike, versus GLD and GDX?
It's a tough call, but really it depends on what you're trying to do. I think GLD, from a perspective as a diversifier within your portfolio, wins across the board on performance. GLD, from a trader's vehicle, is going to win. So I'll give it to GLD just as a broader positioning, but looking forward, and when we get to the mystery chart, I might change my mind.
Okay, well, that brings us to the final battle category, and this is new for our program. Mystery category. This is where our judges get to choose the mystery category, whatever factors that are crucial to their argument, and it could be a wild card in determining the final winner of today's battle. So let's take the mystery category. Mike, who is or tell us more about the mystery category here.
Yeah, so I'm going to look at risk stats and look at correlation, beta, up and down capture, GLD versus GDX. And if you look at that period of time where you're looking 3-year stats, 5-year stats, 10-year stats, what you find is GDX and GLD are highly correlated. So they both move very close in tandem, but GDX comes with a very high upside capture. On 10 years, it's like 500 basis points, 500% on, on 3 years, it's more like 300. But the downside capture is just as ugly. So I think you have to look at it from perspective as thinking GDX is a levered play on gold and GLD is a diversifier within a portfolio. So if you're bullish on gold going up and you're playing it as a trade, GDX is an excellent way to capture more upside. But if you're using it as a diversifier in the portfolio, it's GLD. In this current environment, given where GLD has gone, we're coming up on 10-year highs, all-time highs for GLD. I think GDX has some room to play catch-up, and I like that higher beta play.
So GDX is your mystery category winner?
Yes.
Excellent. And that's correlation, by the way. Was that correlation?
So risk stats in general, correlation, beta,
okay,
up-down capture.
Got it. So it's a multi-mystery category is what I'm hearing. Let's move on to Dave. What's your mystery category?
I would make the mystery category portfolio weighting from the, do we care perspective, because gold in most diversified portfolios for people who love gold is still probably a sub 2 to 5% allocation. So it's generally going to be a token allocation to most investors, if at all. And given the underperformance of commodities and gold in general, it really doesn't have a place in our client portfolios. So I think it's nice when people want to talk about the range of asset classes to choose from. But if people are going to gold for protection, long-term treasuries have been much better for that. And gold hasn't given you a great return for a long time. So I think in most portfolios, gold has a zero allocation, whether it's the miners or the metal.
So what is your mystery category winner?
So overall for this battle, for the mystery category, I'd say the winner is TLT, long-term treasuries.
Both of these unrelated ticker. You're going bonkers.
Yeah. Well, you know what? That's what investors need to hear. They need to hear how they're going to protect themselves. And when you see the protection in long-term treasuries, people need to hear it.
Listen, we started this episode pissing off gold bugs, and this is going to really set them afire.
Yeah, I got to jump in here a little bit on those long-term treasuries.
Sure.
But they've killed it. That's been awesome. We've gone nothing but that convexity can bite both ways. When you start buying that long of treasuries.
People have been saying that for a long time, and interest rates can't go down forever. But in the meantime, the best protection has been long-term treasuries, and it's been a very underappreciated tool for investors, and it does not get enough recognition for what it's done for protection.
Well, I think we may have a future battle in TLT versus GLD, but for the purposes of this particular battle, I'm going to have to score this, my scorecard. This to me looks like a very evenly matched battle, according to my scorecard. I'm going to have to call this a split decision, guys. This was a split decision on yield, a split decision pretty much on the mystery category. But as far as playing these particular themes or asset classes like precious metals, as well as equity-linked precious metals, this is certainly, you can't get better than these two tickers. But again, this is a split decision, and we have no overall winner. So I want to thank our judges for helping us score this particular battle. And it's pretty clear that these two ETFs are pretty evenly matched. Well, that does it for this round of ETF battles. So lots of punches were thrown. Some of them hit, some of them didn't. But the important thing is we all survived. Congratulations, everybody. We're alive. Well, thank you, Dave and Mike, for doing a fine job at judging this matchup. Before signing off, which ETF battles would you like to see in our next episode? Post your thoughts in our YouTube comment section or hit us up on Twitter at ETF Guide. Be sure to hashtag ETF Battles. Thanks for watching. I'm Ron DeLegge. And until next time, watch the battle before you invest right here on ETF Guide TV.